For a limited time, you can get 6 months of unlimited local news access for only $2 at inforum.news/deal. We're honoring World Press Freedom Day, and along with this deal, we're giving you free access to our news website for 24 hours on May 3rd, so you can experience the critical role local news plays in keeping you informed. If you'd like to stay connected to your community with unlimited access every day, subscribe now to get 6 months of local news for only $2. Visit inforum.news/deal now before this deal ends on May 5th. That's inforum.news/deal.
Hello, everyone. Thanks for listening to the Inforum Business Beat podcast. This is your host, Thomas Avanella. We've produced a series of shows to support my recent story on the state of the local housing market here in the Fargo-Moorhead area. You can find that story online at inforum.com/business. But to go further in depth on this topic, we've produced 3 podcast interviews as well. In our first interview of this series, we spoke to Amber Carlton, president of the Fargo-Moorhead Area Association of Realtors. You can find it on our website or in your podcast feed. Up next, we'll be speaking with David Reid, president of the Home Builders Association of Fargo-Moorhead. David explains what a slower home market means for builders and how interest rates are all coming into play. David, how are you doing today?
Doing well, thank you. Yeah, glad to be here. Thanks for having me.
And we're here to discuss the state of the housing market. We were joined recently as well by Amber Carlton of FM Realtors. And last I spoke to you, David, you told me that building costs and specifically material costs have just continued to climb for builders and the people who are having these houses built. So is that still the case? Where does the market kind of stand on that sort of thing?
Yeah, it's been a crazy few years and pretty volatile. Fortunately, things have certainly calmed down in the building products market. So we've seen, like, for instance, one thing that was really volatile throughout the pandemic and over the last couple of years was lumber. And we've seen lumber really calm down and come back down to pre-pandemic levels. So lumber is really essentially a non-issue right now in the cost of building a home. And we've also seen regarding other building materials, we've seen those price increases level off. So we're not getting price increases like we had unfortunately become accustomed to over the last couple years. Those price increases have stopped, and hopefully we're at a spot where pricing for a lot of building materials has plateaued, and we're not going to see that those increases that we had been seeing. But we're not seeing those building materials come down like lumber did. Nothing as volatile as lumber had been going up and down, which there's a lot of reasons for. But I am getting word from various suppliers, manufacturers, and our trades partners that they're starting to see some materials come down as well, other than lumber, like steel. So hopefully our metal roofing, metal siding, those prices are coming down. But they're not coming down like lumber did, as drastically as lumber did. So again, in general, I think where we're at is lumber's back down to earth, but other building materials have kind of plateaued, and so the rest of the market is able to catch up to where those building material prices are, if that makes sense. So it's a more predictable market. Lead times have gotten better for a lot of things. There's still items that we're running into issues for long lead times, in particular appliances. There's still some appliances out there that may take you a year or more to get. But in general, the market has calmed down. It's less volatile, and that helps boost consumer confidence. I feel like, obviously interest rates have been another issue over the last year or so, and those are settling down, even though they're elevated relative to a year ago. They're predictable and more stable now, and I feel like as long as the market is a bit more stable and predictable, then there's higher consumer confidence.
And interest rates are seemingly the central component of this entire conversation. We spoke, it was around maybe July or August of 2022 for a story, and you told me that the reason interest rates kept going up and up was that the federal government was trying to engineer sort of a soft landing for the economy from the pandemic because the housing market was running pretty hot at one point. Would you say that that goal has been kind of achieved, and that's why we've been seeing these cost declines and cost easing?
Yeah, I think there's two things that are driving the housing market in general. It's interest rates, like you say, but also inventory, which is a whole nother topic. And Amber, I think, maybe touched on that or at least referenced it. But with interest rates, that did the way that interest rates rose and the Feds increased the rates, it did dampen demand. Which that was kind of the intention, was to combat inflation. And so that did work to an extent. Demand did taper off. The housing market cooled off, has been cooling off. And now just very recently, over the last 2 months, nationally, we're starting to see demand spike a bit more. So as those interest rates shot up, demand came down. People, I think, are starting to realize, consumers are starting to realize that this is likely a new normal. And we're not going to see 3% or sub 3% interest rates maybe ever again, or at least for the foreseeable future. And so they're realizing this is a new normal. And again, as long as things are a bit more stable and predictable, then consumers feel better about entering the housing market, building a home, buying a home, selling their home. So interest rates over the last couple months now have started to tick back down. And we've seen a pretty quick reaction from the market nationally that demand has started to rise a little bit again, because in reaction to those interest rates, maybe have reached their height, and if they start coming down, then you're going to see a quick reaction from the market and increase in demand. So is that going to quote unquote normalize the housing market? Are we going to see prices come back down to where they were a few years ago? No, I don't think so. I think we're seeing a new normal, and things are kind of settling down, and people are deciding to jump back into the housing market. But a lot of what we're seeing, demand in the housing market is, like I mentioned, is driven by inventory, and that's been a problem for the last 15 years. We just have a real problem with inventory. Inventory is very low, and that takes a long time to correct. A lot of that stems back to the housing crisis of 08-09. And so that's not going to be resolved overnight. But with inventory levels low, there's only so much that builders can do, or that the market can do to battle that. So that may take some time to resolve.
So this is really then a deep-seated issue that's kind of lingered for decades, going on multiple decades now, tracing back to the 08-09 crash?
Yep. Yeah, inventory levels have definitely been a problem, and that low inventory certainly contributes to inflation. It contributes to demand or lack thereof in the market. Now, one thing that as a home builder that we can see in the market is that limited resale inventory does help increase demand in the new home market. And so if consumers now have some level of confidence about entering into the market because they feel like the volatility that the pandemic brought in the market is maybe behind us, and maybe we're still seeing elevated costs and elevated interest rates due to the effect of the pandemic. But this is a new normal, and it's more stable and predictable. I'm willing to enter the market, but there's low inventory on the market. There's limited resale inventory. Then, okay, let's look at building a home. So that can help increase demand in the new construction market.
And so listeners who heard my conversation with Amber heard us use the term the market has cooled down. You're saying the market is more stable now. And FM Realtors did recently report that home sales fell year over year around roughly 20%. Do you feel that on the home building side of the equation?
Yes, and I do feel that, and I can see that anecdotally. The new home market is is maybe stratified in different levels of, the entry level housing response to the market very differently than the $1 million plus market. And so different parts of the market are more quickly affected by interest rates and inflation and higher construction costs than other parts of the market that are working for people with maybe more disposable income. But I do think that there is, I agree with the fact that the housing market has really cooled down in 22 versus 21, and in 23 now, Q1 of 23 versus Q1 of 22, we've seen the housing market cool down. And again, I think that's due to interest rates and inflation and the Fed's battling that inflation, raising rates. And so that did taper off demand. But it seems like, according to NAHB and what we're seeing at a national level, it seems like there's some potential there for demand to start being able to raise again in the housing market as people get used to this kind of new normal.
The Home Builders Association represents numerous builders across the FM area, and you are also the owner of Radiant Homes yourself. So what do you see and observe in your own company, and what's the feedback that you hear from others in your conversations?
Again, I think different builders are having different experiences, even in our market, relative to what piece of the market they're working in, or is it entry-level housing? Is it move-up homes, or is this $1 million plus homes? My company is experiencing fairly strong demand, and there's a portion of the market that isn't as susceptible or isn't as affected by fluctuations in cost and interest rates. It affects everyone, but some people obviously may have different means to battle that with their personal finances. So my company's been fortunate too. We're a relatively small home building company, and we've been able to stay busy and foresee a good year for 23. I feel like my clientele has a high level of confidence in the market and the stabilizations that have happened in the recent future. I know that's not the case for every builder in town, and I have, even within my own business, experienced trades and vendors in the market that are not as busy now, and maybe in certain markets within the home building industry that have seen a drastic decrease in demand. There's now trade partners and subcontractors and vendors that do have a lot of time on their schedule to fill and do not have as much work this year than they've experienced in the past. And so that's a drastic change for a lot of people that have been riding the wave of high demand here locally. There is definitely a shift in portions of the market where we're not seeing that demand, and there's people hungry for work. At the same time, one of the major issues that we're still battling is workforce and labor shortage. So I'm confident that some of these people that are looking for work, there's still lots of opportunity in the market, in our industry and other industries. Unemployment's really low, and there's huge opportunity across all sectors of the workforce. And labor is definitely an issue I've seen in my business, and with a lot of the trade partners that we work with, there's still enough work out there. People are looking for help, for sure.
The housing market feels a lot more stable around here. Is that a good sign for people overall?
I think that's a good sign. I think stability is preferred to volatility, for sure. So I think a more predictable, stable supply chain, more predictable, stable interest rates are good for builders and ultimately good for consumers, being able to plan for their financial future and what that looks like relative to entering the housing market.
And that has to be difficult for you too, because if you are facing an unstable environment, be it getting materials or materials are just getting more expensive, consumers are going to be less likely to take the dive into home ownership or home building. Is that correct?
Yeah, it's become a lot more risky. Even being able to forecast budgets and designing a custom home, and we may start designing a home in 2022, but it's not going to get built until sometime in 23. Historically, in the past, there's when the market's stable, you can predict what what the budget's going to be, but things have been so volatile that it's just, I think builders are more hesitant to give firm pricing or firm budgets, and consumers have been more hesitant to jump into a project that they may not know they know what the budget is today, but a year from now, what does that look like, and how's that going to affect my monthly payments? So that can be a scary thing, and just unpredictability and volatility, I think, is anecdotally for my business, that's been really tough to battle. So again, just having a more stable, predictable market certainly makes my job easier, and seems to be a lot easier for my clients to jump into the market.
Yeah, I mean, that has to be a tough sell if you have someone who's interested in getting a home built, but you can't even tell them what it's going to cost. That's going to have a chilling effect on people wanting to get homes built, I would imagine.
Yeah, definitely. And that's a hard pill to swallow as someone who builds homes for a living. We should be good at budgets and schedules, right? And those are the two things that have just been a wild card over the last few years. And that's hard to adapt to, and hard to take pride in being able to forecast budgets when it's just impossible to predict. So I'm certainly looking forward to that calming down.
So what is your overall read then on the local housing market, home ownership economy? How do you see things going? Do you feel like it's kind of turning a corner for the better?
Well, we have not officially entered a recession yet. And all indications point to that there's still likely a recession in 2023, by the end of 23, being in a recession. Now, a recession is defined, I think, is it 2 or 3 consecutive quarters with negative GDP growth, which I think you could argue that has already happened, but they haven't officially declared a recession. So that is somewhat concerning. But from what I know of this market and what we've seen in this market, one of the great things about being in Fargo, North Dakota, is we're just insulated from the trends in the market and the ups and downs that other parts of the country feel, that might experience a lot higher highs and a lot lower lows. This has always been a pretty stable, steady market here, even when other parts of the country are experiencing, a lot more volatility. So I feel good about that. This is a resilient housing market, really hardworking community. The home building community, the realtor community in Fargo-Moorhead is very adaptable, entrepreneurial, and has met the challenge that we've seen over the last couple of years, and continued to put great product on the market and meet the demands of the market, and try to adapt and pivot, and try to continue to put quality product on the market that is needed. We need more inventory, and we need more housing. And I do feel like, again, that we've turned the corner on some of the craziness and volatility over the last couple of years. So I feel good about the stability and the predictability moving forward. I've seen a change in consumer confidence, and I think that trend is hopeful to continue. And talking with other builders, I know that again, it's an optimistic community, and we're up for the challenge.
So when we hear the word recession thrown around, people think of 08, 09, Great Recession. They think of bubbles. Is that something that you see happening here, or do you think Fargo is well protected enough from that, even if that's a national storyline?
Yeah, I do think Fargo is well protected from that, but there's nothing indicating that even nationally that we'd see a recession like 08, 09. There's so many factors that contributed to that housing bubble that have been mitigated and have been met and resolved in the market since then. And there's no indicators that point to something as drastic as that. The chief economist with NAHB, Dr. Dietz, his feeling is the same, that we're not going to see anything like 08 or 09. And that hopefully it's a short-lived recession and it's not super drastic. So, which I think bodes even better for Fargo-Moorhead, that we're likely, if we're likely not to see that dip as drastic as the rest of the country, that hopefully the worst is behind us and we can see a healthy demand in the market.
And what are the trends that you foresee for 2023 for your company or for home builders here in Fargo-Moorhead?
I think obviously the data that we're seeing for home sales has been that Q1 of 23 was not as healthy as Q1 of 22, and 22 was not as good as 21. But I think it's early in the year, and towards the tail end of the first quarter, we're starting to see some trends nationally that are making a turn for the better. And so that's what I'm hoping, that trend towards a more healthy demand and a more stable market is what catches on in the second quarter of 23, and that we can experience just when I say a healthy demand in the market, not drastic increase in demand or any drastic response to inflation, that we can see just a steady climb in demand and the market being able to catch up with supply chain and lead times. And anecdotally, I'm hoping for a good year. I think overall 23 for me will be a better year than 22. And I'm hoping that other builders are feeling the same. And I know that talking to a lot of clients, consumer confidence definitely seems higher this year than it was last year.
And that was David Reid, president of the Home Builders Association of Fargo-Moorhead. David, thank you for being here today. And was there anything else that you had wanted to add, or anything you feel that consumers need to know going into the next year?
As the president of the Home Builders Association, I want to reiterate that we're a resource for our members, but we're also a resource for the public. If the public has any questions about how to enter the housing market, how to hire a contractor, how to how does the building process work, feel free to reach out to the Home Builders Association. We can put you in touch with professionals, and check out our members online. These are members that the Home Builders Association has vetted, and we believe that these are great members for the public to be doing business with. So check out our membership directory online, do business with them, and contact the HBA if we can be a resource for you in your home buying or home building journey. And I know the same thing for FMAR, the Fargo-Moorhead Association of Realtors, and Amber, and the work that they do. They're a huge advocate for home buyers in this market, and a huge resource for home buyers as well. So reach out to these associations. That we represent our members and do work for our members, but we're here as a resource for the public as well.
That'll wrap things up for this episode of the Inforum Business Beat podcast. This has been your host, Thomas Savanella. If you missed any of the other parts of this series, be sure to listen to them at inforum.com/podcasts or on your favorite podcast platform.